Good morning, good afternoon, good evening, and welcome to the Bull versus Bear webinar. Steve Miley on the call for TradeDay.com. Welcome everyone to the Monday, the 14th of November, Bull versus Bear webinar. So my apologies if you are having problems getting into either TradeDay.com or the members area, members.tradeday.com. I think we believe it could potentially a geographical issue. I think everyone in the US. Hi, morning, Clinton. Clinton, can you get in? You're obviously watching this through the members area, right? Members.tradeday.com, I assume. Because I can't actually get into that area myself at the moment. I think it's a geographical issue we are having. So certainly if you're in UK, maybe Europe, it could be a geographical reason. I know we've had a couple of support tickets saying there is an issue. So, but James is fine. James is in the US. James can get in easily. Our other members in the US I know can get in. I'm assuming, Clinton, you are in, and anyone else who's streaming and watching at the moment. You're all fine. So I think it is a geographical problem. So if you are hearing this and you are on, well, I guess if you've got the issue, you can't log in and listen to it, so you won't know. So, but if you are hearing it, or if you're hearing it on the recording, our apologies. The tech team are working on it right now. Okay. I'm going to go through a slightly, on the Monday we do something slightly different. We'll take a look at what I like to call the shape of the week. So we'll look at that going into today, do a little recap and look ahead. And then we'll take a look at articles from the major news-wise. Not much to add in over the weekend or so far this morning. And then we'll take a quick look at the charts, but not much has really changed from last week from Friday. So where are we? What happened last week? Well, the two kind of events really shaping markets last week were initially we had the market. It was very much buy the rumor, sell the fact. Anticipation of a split in Congress, which is deemed as good for the markets because paralysis in politics, political paralysis, is seen as positive for corporates and the economy. And the anticipation was for a red wave. Republicans expected to do well in the House and in the Senate. In the end, as far as I'm aware, this is the last thing I saw, though. That was last night, that the Democrats have actually retained control of the Senate. Is that correct? I believe so. But the Republicans, although they took the House, have not made the inroads they were expecting. So we had a bit of a buy the rumor, sell the fact for the first half of last week. The market rallying in anticipation of a split in Congress and a split between the executive, the presidency, and the legislature, Congress. And that's deemed as good for stocks. So stock indices went higher. We were in risk on mode for the first couple of days. And then we kind of went into risk off mode on Wednesday. We kind of corrected that as the red wave wasn't as big as markets had anticipated. So that saw a little bit of a wobble on that risk on move. But then the second really event of the week was the CPI data on Thursday, which we discussed on Friday. All measures in here, core and headline and year on year and month on month, all beating expectations, lower than expectations. Market liked it a lot. Biggest update for the S&P since 2020, adding 5% Thursday, 7% for the NASDAQ. And then comments from Fed speakers subsequent to the inflation data regarding a slowdown, kind of reinforcing the November Fed statement. So a less aggressive view on monetary policy going forward. Not on the peaking rates. We're still anticipating the peak to at least go further. And we've certainly had, I think it's Waller on the wires this morning already saying that, we've still got a ways to go. I think the comment was, I think we've got that coming up. So we'll talk about that shortly. And so basically the level we're going to in rates anticipate to be the same. Although as we looked at, and I'll have another look on the Fed tool, the Fed tool's actually seeing a peak in rates, dipping back lower from we were as high as 500, 525. So if we go out till next year to June here on the Fed tool, we were at one point here, 500, 525. Now we're 475, 500 on the peak in rates. Okay. And then by the end of the year, from the peak, we're then looking at now 450 to 475 towards the end of the year. This time next year, beginning in November, we're looking for potentially the first rate hike to come through. Rate cut to come through. And if we look at the December, now nailed on for only a 50. This was, remember, hovering around 50-50, backwards and forwards around 50-50 for either a 50 or 75. Since the CPI, this has been up in the above 80. So certainly looking for a slower pace in rates, but then equally the peak, the market is showing a lower peak, although the Fed speakers are sort of saying the peak's still going at the same level. And that's what I think it was Waller this morning. We'll come to that shortly. So stocks surged, we know that. Yields plunged, the dollar plunged. The dollar index posted its worst day last Thursday since it says 2019 there. That should be 2009 financial crisis. Gold was surging anyway and surged higher. Oil prices have been choppy. What have we got going into this week? Well, today there's nothing really of note. If we go and look at the economic calendar in here, we'll see coming up, we've got nothing of real significance coming through today. Williams is speaking a little later. I don't see, I'm sure it was one of this meeting, but we do have Fed speaker Williams later today. That's not till 6:30. I think I've got this on Eastern, 6:30 Eastern time, 18:30 Eastern time. So some ways to go until we get there. Okay, so it's a quiet day today. If we look ahead to the shape of the week, though, we got hardly anything on the central bank side. We just get RBA, Reserve Bank of Australia minutes. So that's nothing really for us to worry about. And then we're looking at CPI from around some other important areas this week, and also retail sales. So we get Chinese retail sales tomorrow morning, UK employment report, EU GDP, German ZEW survey, US PPI, not usually a big deal. We get UK inflation on Wednesday, CPI data included. US retail sales, probably the biggest thing to watch for on the US calendar this week. Not really much at all from the US this week. Canadian CPI as well, EU CPI. So we get UK, Canadian and EU CPI Wednesday through Thursday. UK retail sales at the end of the week. The big data probably to watch for from the US markets is the US retail sales data. Okay, let's go and look at 5 things to start your day in here. So Biden and Xi, President Xi of China, have got a meeting. There's the G20 summit in Bali. It's coming up, and they are they're trying to arrange a meeting in there. Chinese stocks did well overnight in here. Hasn't fallen through into Europe. We had a slight follow through in Europe, but not particularly into the US futures. A 16-point plan to boost the retail estate market. The real estate market. Real estate is looking a little wobbly in China, and so a plan there has seen Chinese stocks push higher. Crypto is up and down. Some further negatives in here and some positives regarding FTX. It hasn't got it in here about, I'm sure it was Waller overnight, but we do have, they've got Lyle Brainard apparently speaking later today as well, and Williams. I did see though, certainly, let me just double check on my, the 5 things that I received this morning in here. On the European version, certainly had, where is it in here? Comments. So, where are we? Biden's ways to go. Yeah, it was. Governor Waller said we've still got a ways to go before the US central bank stops raising interest rates. Despite good news last week on consumer prices. So Waller cautioned that officials were not close to a pause. Okay, so that's kind of tempered things a little bit in here this morning. Okay. US futures wilt against Fed caution. So this is probably alluding to that. Big funds keep inflation hedges in place despite hopeful CPI. Yes, we haven't seen this kind of rush yet into stocks. Stocks were massively up on Thursday. I thought we'd go further. Fed speaker cautioned, tempered some of the ebullience that inflation may have peaked in here. So so we are seeing that. So a little bit, Waller here, Waller. A ways to go. There it is. There's the article there from Waller. There it is. Okay, yields climb as Fed's Waller pushes back on dovish rate bets. Okay, so that's what's been going on this morning. China property stocks, and say on these new measures, going higher. In the US may skirt recession. This is an article from Morgan Stanley. A report from Morgan Stanley. Europe likely to go into recession. Obviously harder hit with the Inflation concerns because of the situation with Russian oil and gas, but saying that the US may actually avoid recession in 2023. Shares and bonds chasing as Fed urges caution. So this is again on Waller. Fed Waller plays down CPI as just one number. And futures decline on cautious Fed tone, same thing there. Morning bid reality check, again, same thing there, coming through after euphoria from Thursday. But nevertheless, European stocks have just nudged a little bit higher in here this morning. Germany, UK, and France up between 0.25% up this morning. And then if we go take a look at US futures, we've actually had a slight dip, as I said, because of those Waller comments, slight dip in futures this morning here. So between 0.25% down on the Dow, 0.4 on the S&P, and 0.2% down on the Nasdaq in here this morning. So let's go take a look at the charts. I've not got a huge amount to add in here. I mean, Friday was a very, very quiet day after the explosion higher, but S&P all still sets up positively. We did go still higher on Friday. We did take out some minor resistance from over here on Friday, and we're sat right up there on the S&P. We go to the 15-minute charts. Very little to add in here, only back below Friday's lows. Does it look more negative? We're just sitting here. This just looks like a big flag to me. There's the big explosion Thursday, higher Friday, sideways. Flag pattern pointing us higher for me. A classic flag pattern there. And a little bit more negative, but not much more negative. Actually, Nasdaq had a better... The follow-through on the Nasdaq was important. We took out that peak there from the end of October back on Friday. So it's a better follow-through on the Nasdaq. And despite the little dip we've had in this morning, is a minor dip. And again, on the Nasdaq, not much to add. It looks like a really positive, even though that little glide lower in here, looking for that to reverse back higher. Counter trend lines, looking at the counter trend lines in here on those markets. Let's take a quick look at gold and oil. So first of all, we'll take a look at gold. Again, high-level consolidation. We had these surge pulls, surge Thursday, follow through Friday, pulls, a little bit of a dip in here on gold. But again, look, high-level consolidation whilst above the swing lows. Here in the 1749, 47 kind of area, this all looks still positive. Again, looking at the counter trend line that runs across here, a break up through there looks positive on gold. And oil in here, more choppy on oil, but we did have a strong rebound. You got that doji pattern here back on Thursday. Follow through on the doji pattern. So turning point on Friday. We have had a dip in here this morning, but if we look at oil, for me, despite the dip, it did take out that low there. Looking for that to probably swing back higher in here today, but more cautious. I've got no strong view, to be honest, on oil. It's very choppy. And if you look in oil, really, we've been caught in this kind of range. Apart from this, you've got this inverse head and shoulders down here, but really the market's been caught between here, like around $84 and up to like $93-4 in here. It's been caught in there since like back here. This is like July really. Since July, apart from this skirmish down here. And where are we at the moment in that range? Well, if you think we're between $84 and $93.94, halfway point between 84 and 94 is about 89. And where are we trading right now? Well, right around there right now, right? Okay. So the market, is pretty much sitting at or around the middle of the range that's been dominating throughout from the summer and beyond into the third and now into the fourth quarter. So, yeah, the market super sideways. So no real strong view in here on oil. Hold a gun to my head. I'm probably slightly positive after the Thursday, Friday rebound. Okay, guys, I'm going to wrap up there. So if you are in Europe, UK, you may be having an issue, but if you are in Europe, UK, you probably can't listen to the webinar because you can't get into the members area. So our apologies if you're picking this up on the recording. We will be back with you. I'll be back with you with another Bull versus Bear webinar tomorrow on Tuesday. Until then, stay safe, take care, and have a great trading day. Bye.